Markets come into Tuesday with investors showing a greater willingness to embrace risk after a volatile start to the week, as hopes for an eventual de escalation in the U.S. Iran conflict help stabilize sentiment. While rhetoric remains heated, negotiations appear far from complete. The absence of a fresh escalation has allowed equities to recover, oil prices to consolidate, and safe haven demand for the U.S. dollar to ease somewhat. At the same time, traders remain focused on a packed macro calendar highlighted by U.S. inflation, ECB policy risk, and ongoing speculation around the timing of the next Bank of Japan move. The euro remains supported ahead of Thursday's ECB meeting, where markets expect another rate increase as policymakers grapple with rising inflation risks linked to higher energy prices. Sterling is finding some support from resilient UK economic data, while the Australian dollar is benefiting from better than expected Chinese trade figures and signs of stabilization in Asian growth. The yen remains under pressure from wide US-Japan rate differentials, though intervention concerns and growing expectations of further BOJ tightening continue to discourage aggressive dollar yen upside beyond 160. Equity markets remain remarkably resilient. The S&P 500 and Nasdaq continued to trade near record highs, supported by enthusiasm around artificial intelligence, with reports that OpenAI has confidentially filed for a US IPO, adding another boost to the AI narrative. That said, some strategists are warning that stretched valuations and increasingly mature market signals warrant caution, even as momentum remains constructive. In commodities, oil remains the key macro variable. Prices are holding elevated levels overall as traders continue to monitor developments surrounding Iran and the Strait of Hormuz and broader Middle East supply risks. However, the lack of fresh disruption to energy flows has prevented another sharp move higher. From a geopolitical perspective, investors continue to balance optimism around potential U.S.-Iran progress against lingering risks tied to the Middle East, U.S.-China tensions, rare earth supply chains, and increasingly hawkish rhetoric from Russia. For now, markets appear willing to focus on growth resilience and AI-driven optimism, but with US CPI, ECB policy decisions, and geopolitical headlines all looming, volatility risks remain elevated through the remainder of the week. That's all for now.